Because of the ease of the visual analysis of candlestick signals and patterns, it becomes a lot easier to assess a market trend, not by just having to rely on one specific index, but very quickly you can take a look at all the indexes. For example, the Dow bouncing up off the 50. Doesn't look anything real exciting here, other than we might be in this trend channel. However, the NASDAQ provides a much more clear visual element in that we saw that after some buy signals at the bottom of the trend channel and kind of this wedge formation, not only did they break out of the wedge formation, but today they were able to close it above the 50-day moving average. Stochastic still not anywhere near the overbought condition. This kind of implies that bullish sentiment has now broken a resistance level and a resistance level, telling us that there's still a lot of bullish sentiment in this market. And even adding to that analysis, the transportation index, which as we can see has been in an uptrend holding above the T-line, had a little resistance level right here, but today it looks like they closed it above that resistance, also implying the uptrend and investor sentiment is still in progress. This is not rocket science. This is just taking the information built into a much better graphic depiction of what's going on in investor sentiment and being able to assess with a much more clear idea of whether the bulls or the bears are in control. And each signal and pattern has an expected result. As long as the market is not falling out of bed, the patterns are going to probably perform with much better or higher probabilities. For example, our recommendation on PES with kind of a little scoop pattern, as well as a gap up doji right here at the resistance level, makes this very simple. If they open this positive, our simple rule of a doji is that they're going to move in the direction of how they open it after a doji. The probabilities are extremely strong. They're going to take it higher, which also confirms that this resistance level is not going to act as resistance anymore, and that our scoop pattern is doing exactly what we expect it to be doing, providing a slingshot effect to the upside. Again, this is just merely utilizing the information that the Japanese rice traders have provided for us for hundreds of years, showing us what goes on in investor sentiment, which is a reoccurring prospect day after day, week after week, month after month, decade after decade. Investor sentiment is not going to change now or for the next 400 years. That'll be it. We'll see you in the chat rooms.